Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenivek from Bloomberg Radio.
Let's get to what is among our most read stories on the Bloomberg, and that's where we go right now. About 2 hours ago, at his Mar-a-Lago estate in Florida, President-elect Donald Trump announced that SoftBank planned to invest $100 billion in the U.S. over the next 4 years. With more on what we need to know, Michael Shepard is Bloomberg News senior editor for technology and strategic industries. He joins us from our Bloomberg Washington, D.C. bureau. Mike, good to have you here with us. We want to talk about this investment by SoftBank and Masayoshi Son, but first up, President-elect Donald Trump talked for a long time. What did we learn, if anything, new or different?
Well, we learned a lot. He covered a lot of ground, setting aside the question of the SoftBank investment, which is not a small one. He also touched on Ukraine, where he expressed some skepticism about the U.S. approval of using long-range weapons by Ukraine against Russia, striking targets deep into Russian territory. He held out the possibility that he might revoke that authority after taking office and once it expires. He also talked and had his Commerce Secretary, incoming Commerce Secretary Howard Lutnick, talk also about China. And what was interesting there was how the two of them framed this notion of reciprocity, reciprocal treatment by the U.S. with its trading partners and allies and even adversaries. So setting the stage for what might be a longer range discussion, not only with China, but with a lot of other countries that have some trade business and concerns with the U.S. as Trump prepares to take office.
Hey, I wonder if you, Michael, and the team are thinking, okay, this is kind of how things will be in the Trump administration. We're probably going to get a lot of press conferences from Mar-a-Lago, surrounded by, important members of the administration and members of the business community. But you're the expert. Tell me a little bit about this.
Well, it was funny. After the news conference, I looked over to my colleague Mario Parker, who has covered Trump and is now managing editor for U.S. government, overseeing a lot of this coverage. And, we just kind of gave each other, in a way, a knowing wink, because we have seen this movie before. We have seen Trump hold court the way he did 8 years ago. Back then, it was at Trump Tower in New York, when you saw a parade of executives and other people who wanted to be part of the administration, including Masayoshi Son. He, almost 8 years ago to the day, went and visited Trump and made a pledge for a $50 billion investment in the U.S. that would generate 50,000 jobs. And a lot of that actually delivered. There were a few pieces that didn't quite pan out. But we'll look to Trump to try to stage these kinds of events. You can see how easy it was for him, how much he seemed to feel at ease. And the warmth that he showed toward Masayoshi Son and Son toward Trump, likewise, this is the sort of environment that the president-elect thrives in and that we could see more of in the coming years.
So this new $100 billion investment, or planned investment, what do we know about how that deal came together?
It's a great question, Emily, and we are still learning more about this and hope to find out more. One thing we do understand that this is aimed much more at tech like artificial intelligence, perhaps semiconductors, but it's unclear who the partners might be. Will it go to startups? Would it go to, existing companies in the U.S.? Would they try to create something of their own here in the U.S.? We do know from a scoop back in February from our colleagues in Asia that SoftBank had already been thinking about a $100 billion investment in AI semiconductors that would be intended to rival NVIDIA, which has been, riding such a high all year long, thanks to its preeminence in this area of chips that are designed to serve AI needs, the data processing needs of artificial intelligence. But as far as the details go, we are still learning, and we're hoping to find out more.
Michael, the devil's always in the details. We all know that, right? And I do wonder, too, does Masayoshi Son have the money to do this? I mean, he's been buying up a lot of companies, putting cash into a lot of startups, WeWork, Uber, DoorDash. Does he have the money to do this?
Well, it's good that you brought that up, Carol, because based on what we see, he doesn't nearly have the same amount of capital in the tank right now compared to 8 years ago when he was just able to say, hey, look, I'm going to come in here to the U.S. and make $50 billion of investments. He has probably, I was talking to a colleague earlier today, probably $25 billion to work with. But as he indicated during the news conference with the president-elect, he has a lot of confidence in the incoming administration. And that is something that he may be able to project to fellow investors as he seeks to raise capital for what he hopes to deploy here in the U.S.
Michael, we don't have a ton of time left, but I'm wondering, are these investments, these tech investments, typical to what we see ahead of a U.S. administration change? Because it's not just SoftBank. We also saw OpenAI's Sam Altman investing $1 million into Trump's inaugural fund. And we also have Meta platforms, Amazon and Perplexity, pledging millions of dollars to the U.S.
Well, the tech industry, especially big tech, but also the startups like the ones that you mentioned, are all trying to get on the right side of history ahead of the president-elect taking office. They want to make sure that they are in good graces with the Trump team as they prepare to arrive. And that's for a couple of reasons. One, they want to make sure that their plans for investment are not held up by red tape. Trump has promised to cut a lot of that to speed the plow on projects, including on energy that a lot of these tech companies will need. Two, they also want to make sure that perhaps they get a slightly lighter touch when it comes to the antitrust enforcement side. And this is why you're seeing a lot of the big tech CEOs like Mark Zuckerberg and other figures making their way to Mar-a-Lago to meet with Trump. Later this week, Jeff Bezos, the founder of Amazon.com Inc., he will be down there meeting with Trump to talk about a lot of these issues that his company and other tech businesses have at stake as the administration gets ready to take office.
Right. And to be fair, you often see this, right, with administration, especially a new administration, various members of the business or even financial markets community checking in with the new administration. Michael, so glad we could check in with you. Michael Shepard, he's Bloomberg News senior editor for technology and strategic industries, joining us there in D.C.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
So this story, you'll understand why it caught our attention. All right, what do Sam Altman and Elon Musk, Donald Trump and Jay Powell, and Dogman and Paddington Bear all have in common? It turns out they all could be feuding in the new year.
Right. That is what Bloomberg Businessweek columnist Max Chafkin writes in one of his latest stories. He's also the co-host of the Elon Inc. podcast. The latest episode, Mr. Musk goes to Washington and Paris and Mar-a-Lago.
He's everywhere.
We will get into that in a moment. Max is also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. So he knows a lot about these high-profile tech, often billionaires.
Yeah, absolutely.
And how they kind of converse with each other. He joins us on Zoom from New York City. So Max, tell us, how did you decide to come up with this list of the feuds of 2025 to watch?
Well, Businessweek is forecasting all the trends we anticipate in 2025, markets and so on that'll be up and what'll be down. But of course, feuds, who's going to be fighting with who is always a fun question. And I think, during the soon-to-be Trump presidency, we'll probably be seeing more of those, right? This is a president-elect who loves a good, public brouhaha, and we've got quite a few characters, who are connected to the administration who are in the middle of fights of their own.
And it sounds like Elon pops into a couple of these feuds, which is no surprise since he kind of is popping up everywhere.
Yeah, he feuds with a lot of folks. The one we picked on to focus on is Sam Altman, the CEO of OpenAI, which is basically the market leading artificial intelligence chatbot platform. Elon Musk has been beefing with Sam Altman for years, dating all the way back to the founding of this company. To give you the sort of quick version of it, basically, it was started as a nonprofit and has kind of morphed into something else. Elon Musk is not happy about that. partly he says, just because of the principle, but also, oh, by the way, he happens to own a significant competitor to OpenAI. So there's sort of a business dispute and an ethical dispute, and of course a potential regulatory dispute, because the Trump administration, the next Trump administration, will be seeking to change the AI regulatory framework, and Elon Musk could have a voice there.
You left out the good part, what Elon has called Sam.
Right, yes. Elon has adopted the Trump thing of giving everyone nicknames. So he called Sam Altman Swindly Sam. So, given how much Elon Musk tweets, and also the kind of merging between Elon Musk and Trump, I think that would be another thing to look out for, other nicknames, other people who might earn an epithet.
Okay, so I want to get to the other feuds, but weren't Sam Altman and Elon Musk, didn't they initially work together? Like they were first going to be business partners, and now this has fallen into such a feud.
They were co-founders of OpenAI.
Right.
And that's kind of the source of this, because Elon Musk gave a bunch of money to start this thing up. I think at the time he saw it as a philanthropic donation. And over the years, it's become clear that OpenAI, whatever its philanthropic mission, which has to do with, keeping the world safe from AI apocalypse, is going to be a potential threat to some of Elon Musk's companies. Tesla, of course, is embarking on this pivot to AI. Musk has also launched this competing AI chatbot through XAI, which is kind of vaguely related to X, which, formerly known as Twitter. So they've basically gone from being partners, to being frenemies, maybe.
Maybe he's just cranky because we're going to start, not talking about tweets anymore, but talking about skeets. And this gets to another feud that you guys write about, that you include in your list.
This is interesting. Blue Sky, which is one of the competitors to Twitter, over the last couple of years, we've seen a bunch of these come and go. Remember, there was the Facebook version, Threads. There was something called Mastodon. There are also the conservative Twitter alternatives, Parler, and of course, the president-elect's own company, Truth Social. Blue Sky is really the first one to take off in a big way that feels organic. Threads had a lot of users, but they were all kind of coming from Instagram. Essentially, users were being just sort of put there, whether they liked it or not. What we've seen with Blue Sky over the past few months, as the service has gotten sort of more fully featured, and as users, perhaps because they're turned off by the owner of X, Elon Musk's support of President-elect Donald Trump, or perhaps it's just because under Elon Musk, X has changed. We're seeing huge explosions of growth, especially in some of those cohorts of user that had really made Twitter, now X, vibrant. So talking about sort of media figures, celebrities, even some politicians, even some sports folks. It's really, it feels real. I mean, it's much smaller than any of the other social networks at the moment, but it does feel like, it is a potential threat. And of course, on Twitter, you've got tweets, even though it's called X, we still call them tweets for some reason. And on Blue Sky, they are called, whether you like it or not, skeets.
I want to do kind of a Twitter or X poll, because just in our informal control room, I'm getting all these things in our IB chat. Skeets? Really kind of sounds a little risque.
Listen, I don't make the terms. I just report on them.
But so does X. I mean, I have to say, I still type in Twitter.com.
I do too.
Into my browser, and then it like populates to X, but I'm not typing in X.com.
I know. But I'm slowly using X more than I'm using Twitter. Like I find myself
or Blue
going
Sky
there
more than Twitter.
No, I mean just saying X.
Oh, saying X, yeah.
No, but I feel like I'm getting solicited a lot about Blue Sky.
Even Elon Musk sometimes still calls it Twitter. We've joked on the Elon Inc. podcast that we should call tweets X's instead of tweets, but it has yet to take off.
Okay, so staying with kind of the tech realm, you also write about a fight against the DOJ and its antitrust head, or new head, Gail Slater, versus Google and Google Chrome.
Yeah, so this is in certain ways a continuation of a feud that was kind of heating up during the Biden administration. You've had the Department of Justice take on a bunch of big tech companies, including Google and Apple, trying right now or asking a court to potentially even break up Google. When he announced his new head of the Department of Justice's antitrust division, Gail Slater, Trump, adopted a pretty standoffish tone, talked about sort of big tech having run wild, basically leaving little doubt that this is not going to go away. The DOJ and the DOJ's antitrust division under the sort of Trump leadership is probably not going to just completely back off these tech companies. Now we'll see what happens with the FTC. Trump has nominated someone there, and there too there is a suggestion that at least in tech, the Trump administration doesn't want to sort of go easy, doesn't want to adopt a pose that's like completely friendly to industry. So this fight we've seen brewing for years looks safe to continue. I
feel like we're covering the really important ones, and that has to do with Dogman and Paddington Bear, and also Kendrick Lamar and Drake.
Yeah, I mean, I think the Dogman Paddington dispute is the one that everyone on Wall Street will be watching come January and February.
Get the live blog ready. Get the live blog ready.
When the movies come out. I mean, again, these are two children's movies. One a continuation of the Paddington franchise, one the beginning, the first Dogman film, and you couldn't have two more different superheroes. One is very well spoken and well dressed. The other is nonverbal and drinks out of a toilet. So my children are excited about it, and of course, there is a potential business story here. Both of these could be pretty big movies, and so not a direct feud, but a feud for mind share.
Okay, and then Kendrick Lamar and Drake, I thought that feud was a 2024 thing. What's happening next year?
So the feud in 2024 was sort of playing out on Spotify and on YouTube, and it was kind of an artistic feud, a rap battle or a series of rap battles. What we have now is a potential for a courtroom feud, which is maybe not as fun as the rap version, but Drake filing in a court, basically announcing his intention to go after both Spotify and UMG, the record label. And the idea here is that UMG was improperly promoting Kendrick's side of the feud. It's a potential racketeering thing. I don't know how realistic this is from a legal perspective and how likely courts are going to be to go along with this. But just to say that this dispute is not going anywhere.
All right. It is the Fed meeting this week. We get our last Fed decision of 2024. So we kind of saved the very timely feud that could happen in 2025. And that, of course, is between the president-elect and Jay Powell, Fed chair. That's on your list.
Yeah, just kind of a long simmering feud that we saw play out during the last Trump presidency. Trump campaigned on having really low interest rates. You wouldn't believe how low these interest rates are going to be. And Powell, meanwhile, has basically been signaling that whatever interest rate cuts are going to happen, the Fed still thinks there's inflation, it seems almost inevitable that there's going to be at least continued tension, if not something hotter.
Can I just ask you, did you leave a lot on the cutting table? Like, were there feuds where people were like...
we are watching many other feuds, and I'll just throw a few others out. You've got Zyn, the tobacco pouch, versus Alp, Tucker Carlson's anti-woke pouches. You've got, of course, sports betting against sports watching, Crocs against Birkenstocks, Love is Blind cast members against Love is Blind producers. I could keep going, but as I said, it's going to be a feud-filled 2025.
Hey, listen, before you go, I can feel it already in the air. Having said that, before we go, the current Elon Inc. podcast is out. Emily mentioned it in the introduction. Mr. Musk goes to Washington and to Paris and to Mar-a-Lago. It's so funny. Was it a football game over the weekend? And there was a picture of Elon and his pick for defense secretary. And then there was, I think, Elon, and it almost looked like his head was pasted in. It almost didn't look real, but I believe he was there.
Yeah, he was there, and he has been basically going most of the places that Trump goes. And, for a month or two, we've been sort of speculating on, can these two guys with these huge egos hang out with each other? Can they stand being not the biggest fish in the room? And it seems like the answer is yes. Elon Musk, so far anyway, has been able to hang with Trump and play second fiddle, and Trump has been able to put up with what amounts to a new house guest or a new guest who's just sort of always hanging around, and who's offering support, cheerleading, and I suppose some policy ideas.
All right. Interesting stuff. Great list. Made for a fun read and a fun discussion. Max, so appreciate it. Max Chafkin, columnist at Bloomberg Businessweek, co-host of the Elon Inc. podcast. Catch it wherever you find your podcast. You can also find it at Bloomberg.com. And as we mentioned, Max is the author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, some recent analyst news. CICC initiating coverage of Booking Holdings with a recommendation of outperform, and they set a price target of $5,700. JMP Securities also raising its price target to $6,100 a share. Now, Booking Holdings has been on quite a tear and run this year. It's up about 50% year to date. As you know, it's the publicly traded company home to Priceline, OpenTable, RentalCars.com, Cheap Flights, and Kayak, among a few others. There's a lot of names kind of under this company. But we mentioned Kayak because this company supplied some 2.5 billion custom pulled data points for a recent Bloomberg Pursuit story. It's all about the 25 best places in the world to visit in 2025, which you can check out on the Bloomberg at Bloomberg.com. So we've got a really great guest to talk about all of this.
Yes, the CEO of Kayak, Steve Hafner, joining us from Miami. He's got some beautiful palm trees
He does.
in the background. Hi, Steve. How are you doing?
I'm good, Carol. Hi, Emily. Nice to have to be on your show. Thank you.
Yeah, thank you. So, a big picture, let's start.
Yeah.
What are the searches that you're seeing on the Kayak platform right now really telling you about the health of the consumer?
It's surprisingly strong, actually. So we're, for 2025, search interest on Kayak is about equal with 2024, which is a relieving thing for everyone in the industry because 2024 was a really great year in the travel business. And going into the back half of this year, a lot of people were nervous about what 2025 would look like. But so far, travel demand has held firm. Airfares are down a little bit, so prices a little bit down, and that's helping to prop up demand. But the overall headline is it's good news. And there's two other trends underneath that. The first is just business class or premium seats are up 19% year over year, which tells you that consumers are willing to pay up. And then in terms of where people are going, Asia is on sale and it's on fire. 3 of the top 10 destinations on Kayak right now are in Asia.
Where specifically? Is Japan still pretty hot?
It's Japan. So Carol, you got it. Japan is on sale. So if you look at exchange rates, I'm kind of an exchange rate junkie. There's 154 yen to the US dollar right now. 2 years ago, 105. So basically everything's 35% off, including airfares. So, if you look at travel intent, Sapporo is up 31% on Kayak in terms of query volume, Osaka 12%. And it's not just the exchange rate, it's social media. So if you're on TikTok or Instagram, which I admittedly am not, you cannot escape seeing a great video of someone enjoying themselves in Japan, and that's driving a lot of consumer interest to go there.
I have to say, our producer, Cece, YouTube producer, says she's knows 2 people who are going to Japan because of that. So that exchange rate really makes and breaks kind of where people go.
Yeah. No, my roommate went.
Same thing?
And friends, people who I didn't know, knew about foreign exchange, were all of a sudden talking about dollar yen, which I thought was really interesting. I mean, is there anything else driving the interest into Japan, or are there other kind of demographic trends kind of influencing the top trends in travel?
I mean, look, I think winter sports are really huge right now in Japan. People have discovered that Japanese snow and resorts are just world class. So that's going a long way. But it's not all just to Asia, by the way. Caribbean is still very popular. So I think when we passed the data points on to you guys, we showed you that Antigua and Barbuda, the outer islands of Bahamas are also very popular, and prices are down there as well. So airfares to those places are down 17 to 20% versus last year. So not quite the same amount of sale as Japan, but gosh, it's a lot shorter trip.
Hey, I am curious how deep you dig, Steve, into your demographic data, because you mentioned that really strong in terms of travel trends, and you say business class tickets, premium class tickets that people are paying up for. Is it because they're getting a deal or because they're paying up for it? So I'm just trying to get an idea. Is it the really wealthy that are traveling and it's not across the board?
No, I think people are just splurging more on experiences. We do see a little bit of a difference between millennials and Gen Z versus older generations in terms of how they travel. So millennials and Gen Z, they're much more likely to have flexibility in their travel planning, and they're willing to use tools like Kayak Explore, which lets you set a budget and find travel dates and save money on airfare that way and reinvest that into the actual in-market experience. Whereas older generations like me who have families, we have fixed travel dates. We want to make sure that flying experience is perfect. So that means, hey, we want to know where we're seating. We want to board first. We want extra leg room. We want a good airport experience. That's kind of where that growth is coming from on the premium side.
What about the older generations and just how they use technology to plan their vacations? What are the biggest changes that you're seeing in that?
Well, I think the older generations, by and large, if they're affluent, are still using travel agents. There's still over 20,000 travel agents who do bespoke travel planning for those people. Everyone else has already migrated online, and not just online, but they're starting to migrate towards these AI assistants, which is what everyone in the travel industry now is kind of holding their breath to see how that changes. Because up until now, you'd had to download an app or go to a website like Kayak and do a search yourself. Now to be able to speak to intelligent AI agent and have them do all the work for you is pretty awesome. So, and I think we're a lot closer to that than a lot of people believe.
It's interesting that you say that. Our Paul Sweeney of our Bloomberg intelligence team and Bloomberg surveillance just planned a trip to Italy, and he used a travel agent. That's what he talked about with our Alex Steele. So heard it this morning. Hey, having said that, there was a period I feel like where sustainability and thinking about trips and their impact on the environment was appealing, ecotourism. Or you continue to see people book those kinds of trips?
There's a lot more people who say they're impacted by that than what we actually observe on the website and on the app. So we do show people what's an eco-friendly flight, for example, that, is a point of a newer airplane, but people don't seem to be willing to pay more for those flights. So they're still mainly driven by the price point of the airfare or the experience. But I think there is a demographic that's very important to them, particularly on hotels. So we do have sustainability badges on hotels that we think do a good job limiting their footprint, and people do seem where they're going to stay someplace to change their booking behavior to one that's more sustainable.
Hey, Steve, before we go, Emily kind of nailed it. You're in a boat, aren't you?
Well, I'm on my floating office here in Miami, yeah.
Okay, we thought so. We were just wondering if you were going to go to the Caribbean or something, and, since it seems like there's some good deals right now.
There's good deals, but, the worst time to fly is over the holidays, and if you're in Miami, which I am, it's a great time to be here. We're
just having some fun with you. That would be my ideal office.
Yes,
from
absolutely.
A boat.
And that view.
Yeah, exactly. Steve, be well. Happy New Year and happy holidays. CEO of Kayak, Steve Hafner, joining us there from Miami. I think it's interesting. You hear and still continue to see a lot of people traveling post-pandemic.
The Japan is incredible. I have multiple friends that are going or have gone in the last year.
And you're like, yeah, I know about that exchange rate stuff.
Yeah, I know that.
Just a little bit.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, our next guest often looks at our world at large uniquely and distinctly through both an investor's and economist's hat. He does that too with the latest news of the killing of the United Health executive and the amped up coverage around it, the many questions that have arisen out of it as well about the cost and stress around healthcare coverage here in the United States. So we want to talk about that and a lot more. Great to have back with us is Peter Atwater, president at Financial Insyghts. Peter is an adjunct professor of economics at William & Mary and author of The Confidence Map, joining us from Pennsylvania. Peter, Peter, so glad to have you back with us. Your column, which you had shared with me on LinkedIn, I want to talk about it because we can't stop thinking about the murder of that United Healthcare executive. There's so many things to kind of come to mind, of course. But we also saw an incredible response on social media and ensuing conversations about the cost of healthcare, the access, the problems often in accessing coverage. Tell us about your column and what you wanted to get to.
Thank you, Carol. And first, let me be clear that the violence and the incivility that we've seen are unjustifiable. At the same time, if there is a consumer good that causes individuals to feel powerless and uncertain today, it is health insurance. And sadly, they discover both of those feelings at a time when often it is life or death. And it is unsurprising to me that it generated such an emotional and impulsive response, because the vulnerability we feel in that area is intense and widespread today.
So tell us about, right, and I agree with you. I think we've all felt a little uncomfortable talking about it because someone was killed, and it's tragic. And, but then at the same time, it was amazing to see some of the responses and people come out and talk about their frustrations with dealing with healthcare. So put on your economist hat for us and get into your column about kind of how we look at this and what's happened in the healthcare system, and especially when it comes to maybe coverage and costs and access.
Yeah. What's happened is that as carriers have tried to keep the costs down, they've increased either deductibles or they've narrowed the scope of coverage. So you can think of health insurance as yet another consumer product where we've experienced shrinkflation. The difference, though, is that with a box of cereal or a candy bar, we understand this shrinkflation ahead of time, and we are often given a choice to buy or not buy. The complexity of our healthcare system and the pre-approval process is such that we don't uncover the shrinkflation until it's very late in the process when emotion is already high, and unfortunately too, what may be eligible today may not be eligible tomorrow. So it's a repeated experience that consumers are experiencing. And this on top of other ways that they're experiencing vulnerability, it becomes the straw that breaks the camel's back.
I liked how your column kind of linked in this idea about the K-shaped recovery. So tell us about what we're currently seeing with regards to shrinkflation, whether it's within goods or within services like healthcare. What does that tell us about the recovery of the economy coming out of the pandemic?
Yeah, what it says to us, Emily, is that those that are struggling are experiencing this in a much more real way than those at the top of the economy. And moreover, it tends to be on top of other ways they're experiencing vulnerability. So if I'm experiencing health vulnerability, chances are I may be experiencing vulnerability in terms of security, in terms of food scarcity. So this is in addition to other things. And I talk about today the experience of stacked vulnerabilities, where for those at the bottom, the powerlessness and uncertainty they're experiencing feels like it's in everything at once.
When you look at how the stock market is performing, how Bitcoin is performing, we were just talking about that a few minutes ago, that doesn't really reflect this pessimism that you're describing. And I wonder how you square the two. I mean, at least in my reporting, I report on retail investors who have generated wealth from the stock market, but of course not everyone invests their money like that.
Well, I feel like it gets to exactly, Peter, what you talk about, right? That there are a couple different economies here in America, and it explains maybe a lot, whether it's political outcomes or just how people are feeling. Some are feeling an incredible amount of wealth created in the last couple of years, others are not.
Yeah, I had a conversation with Bailey Lipschultz earlier today talking about the invulnerability of crypto investors. And I feel like my conversations are occurring at both extremes today, that we have a group of investors, whether it's crypto or the affluent at large, for whom they are experiencing stacked privilege, where they appear to be powerful and certain in everything. And then we have those who feel very left behind.
Where do you think this goes, Peter? I think about, when I first read some of your writings, and you coined the term the K-shaped economy, and it really seems to apply so well and continues to, here we are out of the pandemic. Where does this end? I mean, does it bring about change ultimately? Or I don't know, like how are you thinking about kind of the longer repercussions or where this goes?
I worry about the zero-sum thinking that comes when we feel vulnerable, that we believe others have gained at our expense. And that to me is a really precarious place to be when you see such affluence and you see those who have such excess in comparison to those who are without. And one of the things that I encourage leaders, whether they're in business or in public policy today, is to be really focusing on where are customers and employees feeling powerless and uncertain. Because I think that leaders have a responsibility today to create greater certainty and control around them. We spend a lot of time looking at customer satisfaction.
Yeah.
We need to be looking at customer confidence and where do our actions create vulnerability in others. And we need to be far more careful about those today, given the disparity in confidence that exists. It's not the wealth disparity that troubles me today as much as the true division in confidence that exists.
Well, it kind of gets me in a great way to my last question. And forgive me, only about a minute or so left here, but I'm thinking about the Fed decision in a big way. And Fed Chair Jay Powell has often talked about how it is tough for a lot of Americans out there. A rate cut, is that something that continues to help maybe that lower leg of the K-shaped economy? And I do wonder how that maybe plays into Fed policy. Does it make sense, too, for the Fed to be cutting rates, in your view, considering that?
It only makes sense to me if we see the intermediaries between the Fed and consumers bring the cost of borrowing down. When I look at credit card rates and even auto rates today, they're really vicious to those at the bottom.
Yeah, I agree. Hey, listen, Peter, so appreciate it. Covered a lot of ground and really thoughtful ground. Always appreciate it. Peter Atwater, president of Financial Insyghts, adjunct professor of economics at William & Mary, and also author of The Confidence Map, which he published a little bit more than a year ago. Peter, thank you, and happy holidays.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, last month, Bloomberg News reported out on how IKEA shoppers will continue to see lower prices at its stores in 2025, but to not expect anything like that this year. And that was coming, Emily, it was kind of a warning from the Swedish home furnishings giant.
Yeah, after slashing prices for retailers by 15% in 2024, which enabled IKEA stores to cut prices to consumers by 10% and was exceptional, more normal levels are in the cards. That was according to Henrik Elm, Chief Financial Officer of Inter IKEA Group, which is the worldwide franchisor for the brand.
All right, so let's get a take on the U.S. consumer. Great guest to do so, and really how IKEA stores are doing here in the United States. We head to Pennsylvania, and that's where we find the U.S. CEO of IKEA, Javier Quiñones, who is also the company's Chief Sustainability Officer. Javier, great to have you here on Business Week. How are you, and how would you say U.S. consumers are doing?
Thank you very much, and thanks for having me. Yeah, 24, it's been a challenging year, I would say, from, of course, inflation, interest rates, and we've seen this in retail, especially in the home furnishing industry. That's why, as you said, a big part of our commitment was to bring back lower prices as we have ever been, because due to inflation, we of course had during 23 especially some increase of prices that we had to do. And by doing that, what we have seen during 24 is that we have actually managed to sell more pieces than previous year, which is a fantastic achievement in an economy where it's not been on all the time on our side, I would say.
So cutting prices actually moved the needle and brought consumers to spend more.
It did indeed. I wouldn't say to spend more, but I would say that this strategy was actually to be closer to many more people. And we like to say IKEA is for the many people, right? And we understand that the many has limited resources or means, right? So for us, it's not about probably spending more, but it's actually to make sure that the IKEA products are available and affordable for many more people. That's why I like to measure more number of customers during 24, because of course the top line, when you reduce prices, you can expect a drop or a slightly drop, right? But what tells you that you're doing the right thing is when more people can afford IKEA products.
So accessibility, right? Lowering the prices and really opening it up to more people.
Right. And maybe that receipt is not as big as it would have been a few years ago. What are you seeing in terms of what shoppers are actually buying? Are they still going for those big ticket items, or is it more a shopping cart that just has some smaller goods in there?
Well, the home furnishing market goes hand in hand with the house market, right? What we see right now is the housing market at some of the lowest we've ever seen, right? When it comes to demand. So we see both sides. We see small changes through more on the accessory side. That's a big demand. We see some people that are not moving, selling, or buying new houses that go into rebuilding or refurbishing of the existing ones. So we see a little bit of both. We don't see one taking over on the other. But as I said, I think it's been more on the price sensitivity than anything else. What we see, though, is an increase on the demand for sustainable products, right? Products that actually help you to save cost in your bills, like the energy bill, right? When you move to LED or food is an interesting one, right? Many people ask, what can I start doing? Well, on the energy, changing by LEDs, appliances that are efficient. Food, it's an important one, especially in the US, when 1/3 of what we buy goes to waste, right? So food containers is, I would say, one of the best friends to actually help people to save money, or water dispensers that reduce the flow. So these are some tips, and we see more and more also demand on these products, which is fantastic, I have to say.
We're running out of time, unfortunately, but just very quickly, how is the digital business looking for IKEA? Because you guys are known for your in-store experience. Are you continuing to focus on that, or are you seeing more people come to your website?
Yeah, well, we see more people coming to the website. We see more people starting on the website, and then where they finish, it's I would say not even relevant or important, right? The stores, the way I see them, I cannot imagine a most beautiful place in the world to actually get inspired about home furnishings than an IKEA store. So there will be a super key in our business, and we will keep investing in digital because it's where the growth, or most of the growth, is happening.
Javier, so appreciate times. We hope you will come back soon, because it is a great read on what's going on with the U.S. consumer and more. Javier Quiñones, he's U.S. CEO and Chief Sustainability Officer at IKEA, joining us from Pennsylvania.
I'm driving in my car. I turn on the radio.
Yeah, how about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got just under 16 minutes left in today's trading session, getting ready to wrap up the Monday trade. An interesting trade. Let's not forget, we've been talking a lot about, we've got a Fed meeting this week and a Fed decision.
And we have stocks at all-time highs, tech stocks at all-time highs.
Again and again and again.
Right.
All right, so let's get to it. Let's see what our Drive to the Close guest has to say about this. With us is Veronica Willis. She's Global Investment Strategist at Wells Fargo Investment Institute, joining us from St. Louis. Veronica, good to have you here with Emily and myself. So, it is interesting that we continue to, it seems, certainly take record out after record, especially when it comes to the tech trade and the NASDAQ 100. What do you make of today's market environment, and do you think the gains continue?
Yeah, I think what we're seeing today are the market responding to those expectations for higher economic growth through 2025, but especially today ahead of this Fed meeting, I think the market is continuing to price in expectations for a cut, a 25 basis point cut from the Fed. And I think that's really what we're seeing today.
So stocks higher,
yeah,
excited about growth being good, but still this idea that, hey, we're going to get an interest rate cut. I'm wondering, Veronica, how does this end? Are we going to get to a point where the Fed is not cutting anymore and stocks are going to need maybe a new catalyst because they can't get excited about the prospect for easier monetary policy?
Yeah, I think that's exactly what we're going to see in 2025. I think we're going to move from the market being excited about an easier Fed to refocusing on excitement around economic growth. So I think through the early part of 2025, the Fed may still be able to cut rates, but as we see growth strengthen and as we see inflation maybe moving a little bit higher, we're probably not going to be able to see the Fed continuing to cut rates.
How problematic do you think inflation becomes? Like, how much higher does it go? How much stickier does it remain? How do you see that part of the equation playing out?
Oh, sorry, I'm having a bit of an issue here with my headset.
That's okay. We want to make sure that you can hear everything. So we're going to have your team fix that, and then we'll come back. We're talking with Veronica Willis over at Wells Fargo Investment Institute. But I do think about how sticky inflation is, and is this just kind of Emily, our new world order in terms of prices? Especially
when you think about what's going to happen with President Trump and his tariffs. I had actually done an article a few weeks ago. I interviewed Citadel Securities, head of inflation trading.
Yeah.
And he said that they were not pricing in that the Fed was going to be making any adjustments based off of new policy. He said there's just too much uncertainty, and a lot of that tariff-led inflation is actually short-lived. But I ask other people, and they don't really agree with that premise.
That's pretty interesting. Well, we're back with Veronica Willis, Global Investment Strategist at Wells Fargo Investment Institute. They're out in St. Louis. I mean, one of the things, right, when we talk about this new administration and the policy, and we're trying to figure out by the people who are appointed, and we know what President-elect Donald Trump has said on the campaign trail, how much of what was said there actually becomes a reality. Do you guys have a clear view on that yet, or do you feel like you've got to wait and see? Maybe it's 6 months, 8 months, 12 months into the second Trump White House?
I think we're still in that wait and see approach, but we are expecting some tariffs, a little bit of a tighter trade policy, which will probably have a little bit of an inflationary impact, which is why we're expecting to see inflation move a little bit higher in 2025. So even if the tariffs are not as aggressive as President-elect Trump has laid out, we are expecting it to be a little bit more aggressive than where we are now, which will certainly have an inflationary impact.
How much higher do we go on inflation? Do you see it going, 3%, 4%? Are you talking about those kind of levels, or just a little bit higher?
Probably just, sub 3%. We're not expecting it to really surge, just a little bit higher from where we are currently.
What does it mean for fixed income investing if we do see inflation kind of take that trajectory?
So I think what we're going to see, yields being a little bit more attractive on the longer end of the curve. So we are expecting to see the 10-year and the 30-year a little higher through 2025. Driven mainly by higher growth. So those rates tend to be impacted by expectations for economic growth a little bit more than the Fed's policy rate.
I also wonder, like, this back and forth of, okay, great, the U.S. economy is growing. And, you talk kind of on a global or international level, and a lot of folks still say, okay, we anticipate the U.S. market is going to outpace international markets, although people have been calling for an international equity bounce back for a long time, and it has yet to come. Your take, you still think U.S. markets are the place to be?
Yeah, I think we're still going to see U.S. economic growth outpacing international economic growth through at least 2025. And so that's going to give us the environment for better earnings in the U.S., better equity growth in the U.S. as compared to international, at least through the next year or so.
How do you play that? Do you just buy the S&P 500, large cap growth?
Which has done so well the last couple of years, right? It's been hard to beat.
Do you just stick with that?
So we do prefer large caps over mid and small, but we are neutral on mid and small caps. So we're starting to want a little bit of that market cap diversification, have that exposure to mids and smalls, because we think they'll do well as economic growth improves in 2025. But certainly large caps are still our favorite at this point.
What about in terms of fixed income? How do you want to play the fixed income market?
So right now, we think the intermediate portion of the curve, think of that, 5 to 7 years, is probably the most attractive place for fixed income. You've got that duration risk on the longer term side, but we are neutral for the long-term fixed income. We would avoid the shorter term and the ultra short term at this point while the Fed is still cutting rates.
I have to ask about investing in alts. And I ask because
love that you went there.
One of my Bloomberg News colleagues, Denitsa Sakova, wrote a Businessweek piece. It's out today about how private lenders are trying to attract retail investors. And so interval funds are growing to more than 85 billion in assets. There's multiple ETFs that have come out that have exposure to private credit for retail investors. Veronica, what do you make of this trade? Is this an area that retail investors should be participating in?
Yeah, well, thinking of the alt space, it's a great place for diversification. So thinking of an asset that's not going to necessarily move in the same direction as the stock market or the bond market. And there are some areas of the alt space that are really interesting right now, thinking of some potential deregulation and maybe an easier merger and arbitrage environment in the event-driven space. And so there are some ways that I think that the retail investor can play into those themes, thinking of those event-driven hedge funds for those types of opportunities to kind of protect a little bit when there's some volatility in the stock market.
Hey, one last question. I am curious, your clients, what do they ask you more about beyond kind of the plain vanilla stocks and bonds or fixed income? Do they ask you more about Bitcoin, having said, another record up 100 to 106,000 today? Do they ask you more about that, or do they ask you more about the private markets, private credit in particular?
I would say right now, Bitcoin is really the hot topic. And it's just because, exactly like you said, with it reaching those new highs, what seems like every single day. And so that's certainly a question we've been getting a lot. And it's mostly been kind of education around what Bitcoin is, as opposed to thinking really in detail about it.
Yeah, kind of fascinating and interesting. Hey, Veronica, thank you so much. You are a trooper. I know you've had some technical difficulties, but you plowed through. So thank you so much. Veronica Willis, Global Investment Strategist at Wells Fargo Investment Institute, joining us from St. Louis. You are listening and watching Bloomberg Businessweek on this Monday.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.